Welcome everyone. Today we'll be discussing a topic that is essential for any serious trader: price action analysis. In order to make informed trading decisions, it's important to understand what price action is and how to use technical analysis tools to identify trends in the market. Price action analysis is the study of price movements in financial markets. By analyzing price charts bar by bar, traders can identify patterns and trends that can be used to make profitable trades. Technical analysis tools such as moving averages, support and resistance levels, and chart patterns can help traders identify these trends and make informed trading decisions. Price action refers to the movement of a security's price over time, including its highs, lows, and opening and closing prices. It is often used by traders to identify trends in the market and make trading decisions based on those trends. Unlike other forms of analysis that rely on indicators and mathematical formulas, price action analysis focuses solely on the price movements themselves. By analyzing price action, traders can gain insight into the psychology of the market and the forces that are driving price movements. For example, if a security's price consistently rises during certain times of the day or week, this could indicate that there is strong demand for the security at those times. Traders can then use this information to make informed trading decisions and potentially profit from the trend. Technical analysis tools are essential for traders who want to analyze price charts bar by bar. One such tool is moving averages, which can help identify trends and potential trading opportunities. Another tool is the Relative Strength Index, RSI, which measures the strength of a security's price action. Other popular technical analysis tools include Fibonacci retracements, Bollinger Bands, and candlestick charts. Price bars are a key component of technical analysis. They provide a wealth of information about the market, including the opening and closing prices, as well as the high and low points for a given period of time. By analyzing these bars, traders can identify trends and make informed trading decisions. There are several types of price bars, including candlesticks and bar charts. Each type provides a different level of detail about the market and can be used in different ways. For example, candlestick charts provide more information about the relationship between the opening and closing prices, while bar charts focus more on the high and low points. It is important for traders to understand the differences between these types of price bars and use them appropriately. One popular trading strategy that can be used with price action analysis is the trend continuation strategy. This involves identifying a strong trend in the market and looking for opportunities to enter the market in the direction of that trend. For example, if the market is in an uptrend, the trader would look for buying opportunities when the price pulls back to a key level of support. Another strategy that can be used is the breakout strategy. This involves identifying key levels of support and resistance and waiting for the price to break through those levels before entering the market. This can be a particularly effective strategy in volatile markets where there are large price movements. In conclusion, we have learned that price action analysis and technical analysis tools are essential for successful trading. By analyzing price charts bar by bar and using various technical analysis tools, traders can identify trends and make informed trading decisions. It is important to remember that reading price bars and interpreting the information they provide is a key skill that every trader should master. Additionally, implementing different trading strategies with price action analysis can lead to profitable trades. Thanks for watching. Like and subscribe, and we will catch you on the next one.